Welcome, everyone. We have another fun video today, a back and forth video. We're going for a year-end recap plus predictions of
Yes.
2024. You can see the topics on the bottom: inflation, interest rates, where we think the markets are going, and then we're going to have some fun with some bold predictions, Kevin. I'm leaving that open. Bold predictions for wherever you think fits that category. So definitely stick to the end because those are going to be fun. But we'll start
That's right.
with inflation. I found this chart here. I'll pull it up. This is from Ben Carlson, A Wealth of Common Sense. This chart here looks at inflation rates from countries around the world: the US, Germany, UK, France, Italy, Canada, all on that chart. And you'll notice they all have the exact same pattern. They all spike after the pandemic, and then they all peak and fall. Now, different peaks, different valleys, but the trend certainly the same. So very clear that this is not like a one country inflation issue. It's very much pandemic reaction to pandemic that created it. That was like the 22, 21 story. And then the 23 story is the other side of that curve, everything coming down. What happened 23? Where are we going in 24 for inflation, Kevin?
Yeah, I mean, if we take a look at it, I mean, that's a perfect chart to sort of give that description. As we can see, I mean, coming out of the pandemic, it was transitory inflation, transitory. Well, transitory inflation became real inflation. And we saw that without a doubt, and it just soared up. But what we learned in the 80s was, the higher you hike interest rates, the chances are the faster that inflation's coming down. And we've already seen that. So again, what we're looking at is now I think we're caught in that format of sticky inflation. But even that is starting, I think, to dissipate a bit because the sticky inflation part was really more or less because the job growth was still there. Well, we're not seeing as much job growth as we did before. The American number was nice last time, but the Canadian numbers have been falling a little bit. So I think that we're going to get between that sort of 2 to 3% range. We may not go any lower, but I think we're probably going to stay there inflation-wise. The interest rates have done what they're supposed to do. So I continue to see inflation slowly coming down or staying in sort of a 2 to 3 ranges, which is exactly where it should be for what the central banks have been looking for. And if that's the case, that's going to lead us down the path to rates down the road.
So 2 to 3, are you talking Canada or the US there for inflation?
I would say that both are going to probably be there. Now, the rate's slightly above that right now at around that 3.1, 3.2. But I just think that you probably get within that 2 to 3 range just based on some of the things that have been going on recently.
Yeah, personally, I think we go even a little lower than that. I think inflation is less sticky. Just the way they calculate that headline number, I think 2024, you could see the US dip a little below 2 and Canada in that 2 to 3 zone as well. So lower than we are now. So the whole idea of high inflation, 8s and 9s and craziness, I think that's pretty much done. I think 24, we see even lower inflation, almost back to that 2% zone for the US, maybe a touch higher on the Canadian side. And rates are part of it. I also think the job market was a big piece of that too. Big piece of that because the job market was phenomenal, lots of strength, and now we're seeing a little bit of slowness in the job market, but by no means is it anything crazy. We're not seeing mass layoffs. You're not seeing the unemployment spike. You're seeing a little bit of softness from an overheated market, arguably, to one that's maybe more of a standard job market where there's a little bit of slack in there. We're moving in that direction, which I think would be a little healthy when it push back some of the consumer demand, which means inflation might ease a little bit related to that. So I actually think, was it rates as much as it was the market in terms of the labor market? I don't know. Maybe they're connected, but certainly both of them are now pointing towards lower inflation as we get into 2024. So related to rates, so why don't we just jump right to that topic? The two are connected here. I'll pull this up. You can talk us through 23 and your thoughts on 24 when it comes to interest rates.
Well, yeah, I mean, as we can see, I mean, the massive increase basically came right through 22. But again, it didn't stop, right? I mean, we went to 23, continued to move up still from January straight through till about July because, the inflation number was still not to the point where they wanted it. So they were going to continue to raise. And the job market, as you mentioned before, was still incredibly robust. But yeah, if we take a look at sort of the turns, and that's the biggest one, right? So the end of 22 has a little bit of a turn, but then in 23, we're back up again. By, February, March, we're down, and then we're back up again. This time we're seeing to get the turn on that scenario where, the Fed fund rate at that 5.38, but you're seeing that 2-year turn coming down. And I think that this time, basically where things are, it has finally hit what it's supposed to do. So rates being there, even though none of the central banks want to come out and admit that we're at the peak yet, I think that what we saw yesterday with the Fed and the fact that their dot plot is showing rate cuts next year, we have hit that mark. We're not going any higher. We will start to go lower next year. And again, a lot of that's going to have to do with trying to stimulate an economy, dealing with high interest rates, how it affects mortgages and other things along those lines. So I think you're going to see those rates come down. Now, whether those rates come down 75 basis points, 1.5 I mean, that's going to be debate for economists going forward. But I definitely think that we're going to see, probably close to a full point coming down over the course of the year. And that seems to be where we're headed just based on the way things have been moving.
Yeah, and I'll quickly pull this back up. This is from Willie Delwich, High Mount Research. The blue line there is the 2-year yield. So if you want to think bond yields, that has a big influence when it comes to mortgage rates, also the GIC rates. And you can see the volatility there, right? People kept trying to guess when the rate hikes were over, and they were wrong. So it went down and then up and then down and then up. And then the orange line is the actual changes by the central bank, which are a little more incremental. And you can see it plateaued. And our view is that's going to start to decline as we get into 2024. And I think that's a big part of the market rally here at year end is people front running that rate cut, say, okay, the hikes are done. Let's start to price in what the world will look like when interest rates go down. Higher earnings, cheaper debt. What does that mean for growth of companies? I think that's a lot fueling the market right now. But I do think lower rates is probably, it's not a matter of if, it's a matter of kind of how much. Like you talked about, is it going to be a full 1%? Is it going to be 75 beeps? Is it going to be 1.5%? I think it's going to be much slower than the hikes. You got a rapid ascent on the rates, and then you'll probably get a more incremental decline. In Canada, I would not be surprised if it's 75 beeps to 100, so kind of 0.75 to 1% lower in 2024. In the U.S., maybe the same. Canada tends to follow the U.S. It's very unlikely the U.S. cuts and Canada does not. Or I think both are going to be cutting in 2024. 75 to 1% I think would make some sense. We get questions like this all the time. And if you have a question, where should you get a hold of us, Kevin?
Chatwithclintonandkevin.com. So if you have questions on interest rates, on inflation, on where you think the markets are going next year, or just general financial questions, please give us a shout or go to our website actually and fill out the form. We're more than happy to get back to you and see what we can help out with.
Perfect. We talked about interest rates. We talked about inflation. Let's get to the markets. I kind of dovetailed it there, mentioning that we get a market rally fueled by low rates. We'll start with Canada here. Kevin will pull this up. This is just the Canadian S&P TSX over the last couple of years. Big rally in 21, the ugliness of 22, and then effectively sideways for the last little while here, Kevin. Where are we going moving forward?
Well, again, I mean, we've had basically a sideways market here. And again, some of it is due to the fact that we've got a variety of defensive stocks that we hold on to in the index, which become very bond proxy oriented. So if they're not moving, our stocks aren't moving the same way. I mean, energy did a really good job here and there up to that sort of 90 to 100 rate, but now you're sitting in that sort of $70 range. So that's going to have an effect on us as well, being such a materials and energy oriented economy. So I still see, though, if you're going to get rate cuts coming forward, that's going to be good for any of those sort of scenarios, because all of a sudden the dividend distributions and everything else are going to be a much bigger play that people are going to want to hold on to. So I think the Canadian economy has a really good chance to have a nice rally going forward into 2024. And again, that's based more on a mild recession coming along or a soft landing, as opposed to something that would be hard oriented.
Yeah, and then I'll pull up the U.S. side here. Much different chart, a bigger drop in 22, but a far more substantial rally in 23. And both the Canadian and U.S. index would be a little higher. I did this on the weekend. They'd be higher today at the end of the week here. But you can see more substantial. And the big difference here between Canada and the U.S., an actual diversified portfolio, not concentrated in a handful of sectors like we are in Canada. U.S. is certainly more top heavy when it comes to the tech companies. They have all the dominant global tech companies. You name one of the biggest ones, it's probably a U.S. domiciled company. And those did incredibly well. They got hit harder in 22. That's why the U.S. saw a steeper decline in that S&P 500, but that a phenomenal rally in 23. You can think about AI, all the hype around that as part of the reason they had that big bounce off the bottom. I do think you see additional growth in 24 because part of this last piece, and I'll just pull it back up here, that last big increase, the last part of the chart, what we're going through right now is that big rally, which is kind of fueled as a catalyst by low rates or the expectation of low rates. It's not just the big tech companies. You've seen a catch-up start for the rest of the market. Your industrials are kicking in. Your financials are kicking in. The breadth of the market is expanding. That is quite bullish. That's a very positive sign. I think you see more of that in 24. Not that the tech companies fall apart and lose a bunch of money. It just maybe they're not the dominant leaders and the only things going up. Maybe everything else starts to go up as well at a greater pace, and you see that catch-up rally for the rest of the market propel it to the next leg higher. That's what I think you could see for the U.S. in 24. Let's get to some bold predictions here, Kevin. I'll let you go first. You can talk market. You can talk whatever you want to do. But let's hear it. What do you got for bold predictions for 2024?
I'm going to make two bold predictions. Again, market predictions never work out for me. It's sort of the up and down with everything else is going. But I'm going to go with a commodity this time. Now, what we've seen is everybody said, oh, well, we're going to go away from fossil fuel and everything else. And now all of a sudden COP28 has come around and we want to eliminate this. I think that you will see oil crack lower than $60 a barrel sometime over the course of 2024. I do not believe it'll stay there, but I think if this continues to go recessionary wise, until you see those rate cuts coming, I think oil could have that sort of a barrier going down there. That would be more of my market situation as to where I'm forecasting. In regard to something else, taking a sports turn on this, I would love to make predictions on the NHL and the Jets, but I'm very superstitious. The minute I do that, it won't come true. So I'm going to go and I'm going to tilt over to the CFL. I see the Bombers going to a 5th straight Grey Cup.
Ooh, 5 in a row. Yeah, that'd be phenomenal. Yep. That'd be phenomenal.
I'm not going to predict if they win. I'm just saying they're going to go there.
Superstition coming through.
Exactly.
I'll do a bold prediction here for the market. I'm going to talk crypto just to throw it out there. Bitcoin went from like 16,000. I'm a little off the mark there, but it dipped below 16,000. It's now over 40,000. It's a phenomenal rally in 2023. But the part that gets me is we really haven't heard about it. Like I follow it, so I know it, but normally in 2021 when you had big market rally, or in 2020 big rally, it was everywhere. Everyone's talking about it. I was getting phone calls on it from everyone and their neighbor. And then now you see it almost triple without a peak. I think it's clearly not euphoria because people aren't talking about it. I think 2024, they have what they call a halving, which limits supply. There's some technical stuff there, but usually that's bullish. So you see another rally in Bitcoin, but this time you get the euphoria as it starts to make a run from 40, in my opinion, back to that 60,000 high. But more importantly, the chatter, the euphoria, the hype, I think comes along with it. Now that could be completely wrong, but I think that's the bold prediction I'm going with for 2024. If you guys have a bold prediction, you can type them in the comments below. We'd certainly love to hear from you. We got other videos on the markets. I'm sure some of them are on the screen somewhere. Any parting words for the folks, Kevin?
No, other than that, this is going to be our last back and forth for the year of 2023. We want to wish everybody happy holidays and the best for 2024. And remember, contact us because we're more than happy to help you with your finances going forward.
Take care.